So my name is Leon Combrink. I'll be presenting this afternoon, and Damien and Bianca are helping out on the Q&A. Leon is also there for any clients who decide they want to ask a really good technical question. Then we've got our expert on hand to assist there as necessary. But today we are, like second bonus week of our RAC webinar series when we want to look at estimates. The content that I want to work through today is to just kind of take you through the standard and show you how exactly we've set stuff out in our templates. And then towards the end, I'll take a file through just to show you the various steps, how the flow would usually work for you when you're doing an engagement. ISA315 was actually implemented some years ago already. Off the top of my head, I think it's for years starting on or after 15 December 2019. So it has been around for a while, and there are a few tweaks, and you might see just in terms of how I go through the file today, there are one or two tweaks we are considering making still at this stage, just to facilitate one or two things as we go through. But let me take you through the standard. Let me take you through how we've set out the working papers, and I think that hopefully will give you a good idea of how to approach estimates in future as you work through Draftworx. All right, so let's start with the standard. And as I work through, I do want to just then show you one or two things in the files at the same time. So I'm going to be flicking between these slides and my Draftworx screen as we go through. So just looking firstly at the requirements in terms of ISA315, we start working at paragraph 13. It's talking about obtaining an understanding of the entity and its environment, including those internal controls as required by ISA315. And that's the big one that's caused a lot of changes this year in audits. But this whole thing is now drilling down towards estimates. But there are two key things just to understand when we look at this paragraph is it does speak there about the auditor's procedures to obtain the understanding shall be performed to the extent necessary to provide an appropriate basis for the identification and assessment of risks of material misstatement. So folks, there is going to be a requirement for you to apply professional judgment when deciding on the extent of work that needs to be performed when you're dealing with estimates. So if you're dealing with a small company, maybe those estimates are not as complex and you might do a little bit less work, and you go to a bigger company and there's more work to do. But please always understand it's this thing that says to the extent necessary. And so sometimes, yes, we're going to have a lot of questions in our template. There's a lot of space to insert information, but always just go and understand how much do I actually need to input, or how much detail do I need to go into in order for me to successfully complete this engagement. So that's paragraph 13. If we move on to paragraph 14, where it starts talking about what we need to do in order to get to understand these various facets. And it starts, this is paragraph 14. Sorry, I cut off the top of paragraph 14, or the number. It talks about the entity and its environment. And without going through necessarily line by line of each of these paragraphs, the important thing to understand is when we go and look at the standard and we then go and have a look at Draftworx, I want you to see that here sits the entity and its environment when we're dealing with one of our estimates working papers. So when we speak here about documenting the requirements of the applicable financial reporting framework relating to the estimate, go and have a look here in ISA315, the requirements of the applicable financial reporting framework. All right, so presentation and disclosure, that comes in there. Is the current year accounting policy in line with the requirements of the applicable reporting framework? Regulatory factors. Where did I see that? Paragraph C, regulatory factors. Nature of accounting estimates and related disclosures. We talk about presentation and disclosure requirements. It goes on. Entity oversight and governance. Sorry, I lie. It doesn't go on. So this is the entity and its environment. The next big heading in Draftworx is the entity's internal control. And there's the entity's internal control. Still start of paragraph 14. Hope I'm not getting myself confused here. But you'll see it goes on from E, and it keeps going after this. It actually goes H, I, J, one or two things below that as well. But when we start looking at entities' internal control, we have that heading there. We're asking questions about what is the experience and competence of those making the accounting estimates, document review process and approval processes. These questions that we're raising in our templates are directly related to what the ISA315 is highlighting. And this goes on a whole lot further. So the questions that we're asking, folks, are all directly linkable back to the standard. And so it's very important to understand the standard when you're trying to understand what to complete on these working papers. Now, in particular, we're dealing with the entity's internal control. There are going to be some generic things that are applicable, and there are sometimes going to be, for this specific estimate, there are additional things that we need to capture as well. And that's why what you'll see starting at question 2.2, it's talking about the fact that some of this information may be common to most or all of the estimates. And so what I'm going to show you later is when we get to the actual working papers and we go and look at document 1280, which is the ISA315 considerations working paper, there's actually space for you to go and complete this information sitting under 2.2 in one working paper, and it'll then carry forward to all of your estimates working papers where you then only need to edit certain information. But I'll go more into detail on that a little bit later when we actually get to those working papers. All right. Sorry, I was saying paragraph 14. Sorry, this is all still part of paragraph 13, actually. Entity and its environment, entity's internal control. And it then starts talking about the auditor reviewing the outcome of previous accounting estimates in paragraph 14. All right. So there is a question around that. Just trying to remember where it is. Document the previous year's accounting estimate. Document the actual outcome or re-estimation of this year. Based on the comparison of the previous estimate to the actual outcome re-estimation, is there any risk of material misstatement raised by this in the current year? I'm hoping, folks, that you're seeing that what we have in our working papers, you can refer back to ISA315 and then go and have a look in the related paragraphs. There are those application guidance paragraphs that you can use as well to assist you in capturing information around estimates. If I go a little bit further, does the engagement team require specialized skills or knowledge? And this comes because of, in paragraph 15, it says, with respect to accounting estimates, the auditor shall determine whether the engagement team requires specialized skills or knowledge. This is almost a direct copy of what we're seeing in ISA315 appearing as a question on our actual working paper. So when we need to, or when we're designing these templates, we have to consider what are all the possible outcomes. So you might go into an engagement and you'll say, listen, the estimates are all going to be very simple, so I don't need to worry about getting a specialized outside person for whatever reason. But the point is that's not necessarily always documented. So maybe a lot of the time your answer here is going to be no, and your answer might be a very common, it's a low complexity, or we do have a team, we have so-and-so on the team that can do this calculation. But we do need to document all of these considerations while we're doing our estimates documentation. The next section, 2.3, talks about indicators of management bias. Now, if you go and search management bias in ISA315, it is everywhere in the standard. And that's why you'll see management bias is going to pop up repeatedly in our templates as we work through the working papers today. So there's not at this stage a direct paragraph, but we will look later at the paragraph that's headed up management bias. Communication, once again, is one of those things where a lot of things can lead to a need for communication. So you'll see communication is another theme that is going to pop up in multiple locations as we work through the file. So that's kind of the first step. Once we get to a working paper, you'll see it's marked step 2. We'll get back to step 1. What I'm just trying to highlight, folks, is when you get to step 2 and you want to understand why these questions are there, you don't have to go much further than the standard itself, because therein lies the reasons for our questions. Sorry, here is the paragraph on communication with those charged with governance. Again, like I say, it is in multiple places, but we've put it here because when things arise, and remember we need to consider other ISAs here as well, you might need to at some point look at, hey, something major has happened. We need to consider if we need to communicate this immediately or whether it's something that we'll communicate at a later stage. Think of something like a reportable irregularity that maybe pops up while you are busy with planning for your estimates. You can't wait till the end of the audit. You've discovered a reportable irregularity. You need to immediately start assessing it. And so that's why these things are going to appear everywhere as we're going through. All right. The next section of ISA315 is identifying and assessing the risks of material misstatement. So that we do in step 3 on our template. And you'll see I've done some coloring. You won't generally see this coloring, but I just wanted to highlight a few things as we work through it. And so when we're looking at risk of material misstatement, what you will also see, the same thing happens when we do our risk assessments in section 15, is we go and look at the significance or the magnitude of the estimate or the balance, depending on where we're working at it, and the likelihood is the other area that we need to look at. So we go and say, well, the first question is, what is this estimate's balance? Is it something that is likely to cause a material error, or is it rather just high, medium, or low? The potential difference that we're going to see, or the potential errors we might find related to this estimate. So we first got to go and identify magnitude, and then we go through a whole lot of different questions, and we'll start with degree of uncertainty. We talk about complexity, and later on we talk about other inherent risk factors. Well, folks, again, when we go to the standard, look at the major items. 16A, estimation uncertainty. What is 3.2? Estimation uncertainty. Look at part B, complexity, subjectivity. That is our 3.3. Oops, I'm scrolling too fast. Sorry. 3.3, degree of complexity and subjectivity. Other inherent risk factors. You've got a section for other inherent risk factors. So the questions are grouped directly in relation to what we're seeing in the ISAs, or specifically in ISA315. Now, what we've done on this working paper, we start, as I say, with the significance. What's the sort of value? What are we expecting as a possible risk area here? What we then do is all of these cells that I've now marked in orange for today's session, just scroll down further. So that incorporates the degree of complexity as well as the degree of estimation uncertainty. These are just raising possible factors that could indicate a higher level of estimation uncertainty or a higher level of complexity and subjectivity. And what we do with that information is we go and count how many yeses appear in these orange boxes. So at the moment, I've got 3. And based on those yeses, we go and calculate a level of risk likelihood for you for this engagement. So we've got materiality. We now have a likelihood. There were quite a lot of yeses. And because of those yeses, almost certain plus material error gives me a significant risk on this specific estimate. The other thing, if you say that there are other inherent risk factors, so talking here about degrees of subjectivity associated with the accounting estimate influence the susceptibility of the accounting estimate to misstatement due to management bias or fraud. Now we are talking about management bias or fraud, and therefore as soon as I say yes to this item, it is going to force this cell to be almost certain. So even if you've got no other yeses, but you say this other inherent risk factor is yes, it's going to make this almost certain. If I go and I change that to an N, you'll see it's gone down to high because I have gone and removed that one. If I go and remove these other yeses, you'll see that we end up with a low. So we try and calculate this, folks. It is a little bit of a judgment call. And if we ever get to an assessment here that you don't agree with, we are actually looking at the moment of perhaps making this a user editable field. At the moment, it's not. It would be locked. At the moment, I'm logged in, so that's why I would be able to change it. But we do try and use this to go and determine what is the likelihood of a misstatement occurring. Now, when something becomes a significant risk, I want to show you what it says in paragraph 16 and 17. ISA315 tells us we need to separately assess inherent risk and control risk. Okay. Section or paragraph 17 says that if there is a significant risk, it tells us we shall obtain. So we must obtain an understanding of the entity's controls, including control activities relevant to that risk. So what we've done is, as soon as this item becomes significant, as it is here, there are questions that are going to come up about documenting controls, potentially doing walkthroughs, and then ultimately deciding if we're going to be doing control testing when we get to the audit approach. Just to show you that if this item is no longer significant, that whole section goes away. Theoretically, you could go and say, listen, I do want to assess the control risk in a little bit more detail. But we're kind of making the assumption here, folks, that you probably are going to want to limit your control detailed documentation to those significant risks rather than any risks. But as I say, you're still going to have some generic controls that you will discuss in step 2. Step 3 is dealing with more of the detailed control approaches. And you'll see it now asks, is there a mitigating control? Because first and foremost, if you've got a significant risk and there's no control, then there's actually not much more you can really document on that. Then we would go and document mitigating controls, document any walkthroughs if you wish to, go and decide if the controls are designed and implemented effectively. And then will we do tests of control? That's the last question. Go and document where you've performed any tests of control. It's important to note that there's a link here to a working paper to do that control testing. And then our audit approach is a summary. There are no formulas in here. We would just go and say, look, we're going to do substantive tests, or are we going to do analytical procedures as our substantive test, or we're going to do test of detail as our substantive tests. You could talk here about timing, because we're looking at audit approach, and has what we've documented changed our audit approach in any way? Now, generally, I assume that this probably would be no. But if you were, for instance, performing an audit and we were doing estimates on PPE, and you initially said, look, PPE is low risk, but we've got this depreciation estimate we need to go and look at. And you get here and you see, you know what, there's actually problems. We might need to go and revisit the amount of testing that we're going to do on PPE in our outside of the estimates working papers as well. So that's why the space is provided here, just to enable you to go and document those changes. So folks, the moment you have a significant risk, there are going to be more questions about controls, because paragraph 17 says if there's a significant risk, you must obtain it. But I want you to also see that in terms of paragraph 16, the inherent risk and control risk are being assessed separately to here, because we're first looking at these inherent risk factors related to complexity, subjectivity, estimation, uncertainty, and other inherent risk factors. And then we go and have a look at the controls. Now, we don't at this stage document like what is our level of control risk. We haven't drilled down to that level of detail. But if we are testing controls, that effectively means we're bringing our control risk down to below maximum. If you don't test controls, control risk is always left at its maximum level. But when we do test the controls, we might see, okay, we can now do less substantive testing because of those controls. Okay, now we need to respond to the assessed risks of material misstatement. So we've decided we've got a significant risk. We've decided we'll do control testing or not. We've documented our approach. We go to step 4, and now we've got a whole lot of procedures. Now, folks, the yeses you see here, I have inserted them for today's demo. Normally, none of this would be yes. I just wanted to say yes to these items so that what I wanted to demonstrate as we spoke was ready. I didn't want to have to go and type in all these yeses initially. So what I want you to again see is what we have in our template is matching what we see in the standard. So it talks about A, B, C. A is obtaining evidence from events occurring up to the date of the auditor's report. Approach A, obtaining audit evidence for events occurring up to the date of the auditor's report. There's, again, folks, a direct link to what we see in the standard, to what we see in our working papers. Approach B, testing how management made the accounting estimate. B, testing how management made the accounting estimate. And you'll see it's got additional paragraphs it refers to. So you can go and see in those paragraphs, you'll see, for instance, let me go to paragraph 23 quickly. There's a heading there, methods. There's a heading under approach B, methods. You go to the, and as you go through the working paper, if you go through paragraphs 23 to 27, there's another one for significant assumptions. There's another heading in the standard for data. There's a heading in the standard related to point estimates. We're not making this stuff up. This is the stuff that you see in the standard. You can go back to paragraph 18, developing an auditor's point estimate or range. There's developing an auditor's point estimate or range. Now notice that management's point estimate is here. Auditor's point estimate is approach C. So there is a distinction between those two. All right. The other thing that I want to point out is there's a very important word at the end of B. It's an or. That means that when you get to step 4, You do not need to do every single procedure. Optional, up to you. I would say go and first select an approach. Are you going to follow approach A, B, or C? If you're doing one, that might be enough. If you do A, that could be end of the work. You're not going to do anything under procedure B or C. If you do B, you might go and say, well, I'm going to use these procedures and go and make a decision on what procedures you're going to be performing. The other thing that I want to point out is that because of the nature of estimates, it's not really possible for us to comprehensively design clearly what your actual audit procedure needs to read like. What we're talking about is the nature of the test. So it says under methods, I'm going to use one at random, evaluate whether judgments are made in selecting the method, give rise to indicators of possible management bias. All right, maybe not the greatest example, but it's one of the steps that we need to do under methods. Evaluate is not necessarily a comprehensive working paper. You might decide that I'm going to follow this methods approach, but what I'm going to do is I'm going to go and design my procedure on my actual working paper to say this is what we did to evaluate and list the steps that you did and then document your outcomes. So don't expect that these procedures are in and of themselves complete. You will need to go and assess them and adjust them according to the specifics of the engagement of the client that you are busy working with. So folks, the responses, here they are. This is what ISA315 requires, and we need to make a call. The question then comes back to controls. Remember when we had a significant risk, we were required to document some controls. Paragraph 19 goes on to say that there are two instances in which controls are going to be required. So as required by ISA330, the auditor shall design and perform tests of to obtain sufficient and appropriate audit evidence as to the operating effectiveness of controls if, firstly, is there an expectation when we did our assessment of the risk of material misstatement? Okay, and that comes back to the first set of questions. I'm not concentrating on the control section. I'm talking about all of these things that you answered yes or no to. When you assessed these items, did you consider, hey, there's a control here, so I'm not necessarily going to say that this identifier is applicable. So it's saying if that's the case, if we considered controls being effective when we did our assessment of that risk of material misstatement, then we must do a control test. Okay, but that's obvious. We go and do the assessment here. If our assessment is based on some form of control, then we've got to do more work, do some control testing. The second instance is if substantive procedures alone cannot provide sufficient appropriate audit evidence at the assertion level. Now, this we see in other areas of the standards as well. You do control testing when you expect that there are effective controls when you assessed ROM, risk of material misstatement, or if substantive procedures can't provide all the evidence you need alone, then you need to go and design control procedures. What I want to point out in step 4 is that these procedures are not necessarily either control or substantive procedures that you see set out here. Some do talk about recalculation, which definitely can be more along the lines of an analytical procedure. But folks, you will need to go and design the specific procedure for your client based on their systems if paragraph 19 needs to kick in. So one of these procedures could include both control and substantive testing. It's really going to be up to you and your professional judgment how exactly you want to set out these procedures as you work through them. All right. The other thing just to note in paragraph 20, there's a little bit of a difference in ISA 540 from what we've recently changed related to ISA 315. Now, in ISA 315, if we have a significant risk, we're always required to do some substantive testing. But the standard no longer requires that we do tests of detail. ISA 540 is different. It's still as it was previously. We can do substantive procedures, but they must include test of detail. So please be aware of that in paragraph 20. When we get to the bottom of this questionnaire, there's a question related to indicators of management bias. This for me is not an optional procedure. You do need to go and indicate if what you tested indicated any existence of possible management bias. And I said earlier, this will come up. Go and understand paragraph 32. Are management trying to manipulate the overall look of the financial statements with their estimates? Are they trying to overstate revenue because revenue is used as a basis to calculate their bonuses? It's that sort of thing that we need to go and consider. If is there anything in this estimate that I'm doing that is a possible management bias? All right. Paragraph 33 then begins the evaluation. Now that is step 5. Okay. Now, once again, you'll see that there are a number of items listed in the conclusions. Again, in those exceptional circumstances that maybe one of these is not applicable, you might want to leave them out. But generally, most of these are going to need to be considered for each estimate you do. Now, the exception would be these last two, because the one is for a fair presentation, and the other one is for a compliance framework. I suspect that mostly you deal with a fair presentation framework when you're auditing, because you're probably auditing in terms of IFRS for SME or full IFRS. A compliance framework is something different. So there are just two different procedures there. It talks here about disclosures related to the accounting estimates. And if there are differences in your opinion on that final disclosure, you've got to take it to overs and unders. And there are on our overs and unders worksheet, as you saw last year, specific columns available for estimates for disclosures. So just bear that in mind. All right. And then we get to a little question at the bottom about a high-level overall assessment of the impact of this assessment on the assets, liabilities, and equity. Okay. Now, the reason that we came up with this question is also related to management bias. And just want to check. Paragraph 32 tells us that we need to evaluate these judgments and decisions included in the financial statements, but it goes on in paragraph 32 to say, even if you go to one estimate and you say, this estimate, in spite of what might look like management bias, it's reasonable on its own. So I might say that's fine, there's no management bias. But it says, even if they're individually reasonable, are there indicators overall on your financial statements as a result of management bias? So what we're trying to do, and unfortunately with estimates, you're not necessarily going to be able to associate a rand value to each of these assessments. But what we're basically saying is, this assessment, does it tend to increase, decrease, or leave unchanged at financial statement level your assets, liabilities, and equity? It's designed now for each estimate for us to go and capture what is the general impact of this estimate, so that when we get to conclusion, we can draw an overall conclusion on our estimates based on this information. And later on, I'll show you exactly where this information pops out. And then at the bottom of step 5, there's also a whole lot of questions just to ensure that you've now decided on appropriate procedures. Have there been any estimates identified but not corrected? Are there any estimates that you found that you didn't document originally on 1280? So that's the specific question B. Maybe you might discover while testing an estimate that actually the estimate, there's a missing estimate. We found something more. And if that is the case, I just want to show you, it'll pop up. If yes, please raise that on 1280, and I'll take you to 1280 later, but you'd go and then make sure that you add this new estimate. It has questions for fraud, just to also, if you discovered any possible or alleged or fraud when you were doing this test, we need to raise it, and then we need to document where we've captured the details of this fraud. Okay. So that is quickly an overview of the main estimates working paper and a tie-in to our standard. All right. Just what I mentioned earlier, disclosures. Paragraph 31 deals with disclosures, and so you'll see there are questions around disclosures in step 5. That's why it's there. What I want to do now is I want to take you through the process of how I'll physically do the work when I'm auditing. So I've given you a little bit of the background. These questions, folks, are coming from the standard. All right. Unfortunately, we can't do much about that. But let's say I am starting an audit and I want to start from 1280. What am I going to do? So we go and we start with working paper 1280. And when you have not yet populated, there are not going to be any estimates working papers like the one I just showed you. That would be non-existent. You start here in 1280, part of your planning process. And what we're asking you on this working paper to do is to go and identify the applicable estimates in this entity. Now, what I do want to say, folks, is please don't go and say yes to everything. This is a long list of estimates. It's never intended to be you must say yes to all. This listing is about giving you some key ideas to think about, but you need to go and determine where management is actually doing an estimate calculation of some type in their financial statements. Depreciation. Sure, let's think about depreciation as an estimate. If I go and I read the standards and the financial reporting framework, IFRS and IFRS for SME, typically depreciation seems like it is an estimate, because what management is supposed to do when they purchase an asset is they should look at this asset and say, this vehicle will be used by my company for 4 years. And at that point, it's going to be scrapped. And I'm going to sell it for 50% of its value, although realistically, maybe 25% of its value. So in that decision about depreciation, I've considered residual value and useful life. So normally, this should be management estimate for every single asset purchased. What is its useful life? What is its residual value going to be when I sell it in 4 or 5 years' time, or however long I've chosen? Here's the problem, though. Most entities, I don't know if it's still the case, it was when I was auditing, have no clue how to calculate useful life or residual value for that matter. I remember when the standards changed years ago and we suddenly now had to do this, I spent lots of time on Auto Trader or to go and find out what the value of a 4-year-old car is, to go and determine what a residual value needs to be for all these assets on their financial statements. And if it's big machinery, I mean, we had some clients with massive machinery, 20, 30 tons of steel. That's not worth nothing when you dispose of it. it's worth the scrap metal value. So it even has some sort of value. But management has decided that they are going to use the SARS rates and depreciate everything to zero. Worst nightmare for an auditor, because that's not what the standard requires. But folks, consider then, is there an active estimate being made by management? So do I actually need to raise this as an estimate and look through it? Now, I don't know necessarily what the answer is going to be for every single individual client, and it remains a professional judgment call for every single client you do. You can't suddenly decide for everything you're just going to stop auditing depreciation as an estimate, because that will cause problems for you. But we're looking, folks, for real estimates that happen. The other reality is that the nice thing about 1280 is you can always come back and add more later. That doesn't mean ignore 1280 till the end of the audit and then forget about it and hope we don't get an URBA review. It means that exactly what I raised in that previous document, one of those last questions in the conclusion was, have you discovered another estimate? Well, then go to 1280, document the new estimate. Maybe you're auditing PPE and you realize actually management has done a residual value estimate here. Let's go back, put yes as a residual value, and we can repopulate estimates and it'll put the new estimates in the file for you. So you'll see on the right-hand side, whenever I say yes to a new estimate, it is immediately going to put a reference number in for me. And then I'll know when I populate, it's going to create that working paper and I'll be able to go and open that working paper and document information. So I've just at random chosen a few for today's demonstration. We do need to go and carefully consider each and every one of these, folks. When you're doing an estimates or when you're looking at estimates, go through them, consider, is management doing some sort of an estimate? Now, the second sheet we've called the general information, and this links back to what I was saying when we were looking at the working paper as well. Sometimes your organization is small, and instead of having to answer a whole lot of questions exactly the same for every single estimate, we identified a number of questions that could possibly be answered generically and later edited if needed. So for instance, this first question, what is the experience and competence of those who make the accounting estimate? So list the names of everybody that's involved in making an estimate. So this could be Leon, Damien, Bianca, and Dalian. All right. Maybe one estimate, only Leon is involved in that estimate, but I'll show you later what we'll do with that. But for now, go and document the common information. Write the documentation here fairly generically so that you don't have to go and edit it on every single working paper. But what we are then going to do is all of these questions that we answer on 1280 will automatically populate to our estimates working paper. And if when you get to that estimate, the same applies for this estimate, then great. I don't need to go and document more on that working paper in these questions. Okay. So, I mean, let's just consider this last question as well, just to give you a last kind of understanding of what we're looking at here. Document how management reviews the outcomes of previous accounting estimates and responds to the results of that review. Now, they could have 20 estimates. Hopefully not. Maybe they have 5 estimates. And management reviews them at year end once. Then let's document that. I don't need to say, oh, this estimate, they do this, and then have to go and change the name of the estimate if what they do is the same. Let's just say all estimates are ... Or maybe there are 3 different people that do something slightly different, and you can document all 3 different approaches and then just delete the not applicable when we get to the working paper. And again, just for example, I'm going to say Leon does, Bianca does, Damien, and Dalian does. All right, so I've captured some common information that we're going to see on all my working papers. All right. The guidance, what you'll see is it speaks about 4 different steps. This working paper itself, step 1 is the documentation. Step 1 continued, but you don't really see the other steps mentioned. Please have a look at what these steps are. Step 2 is we're going to populate an estimates program for everything that we've completed in step 1. Step 3 is to actually go to the methodology tab. Sorry, that needs to change. It's actually the working papers tab. And you can go in there, click populate estimates. Then step 4, you actually need to go and say, okay, I've got to complete all the other work. So when we get to the second document, we were speaking there about step 2 to 5. That's where those steps come. So sorry about maybe there's a bit of confusion, Dillian. Maybe it's something we can rather talk about actions here and steps there. But here you'll see the breakdown. Identification of the estimates happens in 1280. Understanding, assessing, responding to, and overall evaluation goes into every single estimates program. And then we do a summary at the end in 0306. Okay. We've also got a comprehensive guidance. This is more applicable in the separate estimates working paper, and I'll show you there where that sits and how it links. But that's our guidance sheet for 1280. Okay, now I have deliberately gone and created one more estimate. I've now just tabbed from one sheet to another so that it updates the database. So now I want to go and for now look at this property, plant, and equipment useful life. If I go to 30.15.01, sorry, I must have populated that one already. I didn't delete them. I'm going to choose another random one because otherwise we're not going to see what I'm looking for. Just going to delete that. Let's go and say loans to shareholder, amortized cost is the one I want to do. 50.15.02. There is no 50.15.02 yet. So I've changed that. You do need to just tab before you can populate the working paper programs or the estimates. So working papers, populate estimates, and now, boom, there's my 50.15.02. Identified estimates. I've captured the general information for them, and I've populated them. And here I go to 50.15.02. Now, remembering, folks, for every single estimate you said yes to, you will get one of these documents put in place. Okay. Now, I spoke about the guidance. The guidance is repeated here. It's exactly the same guidance, but here is where these guidance notes come into play. You'll see next to each applicable section, you can just use the hyperlink to take you to the guidance related to that specific item. So, folks, you've got the standard, you've got our guidance sheet to guide you through the process of completing this working paper. Okay, so entity and its environment, go and document. IFRS SME, we're talking about loans to shareholders. So this is basic financial instruments. Paragraph, what is it? Section 11, hey? And 10 or 11, I can't remember. You can correct that. And then you can go and describe policy. You might already have a working paper where you've documented the business cycle or the system description. So you might just hyperlink this directly to that system description. As long as that system description directly deals with the estimate portion as well, and not just the general day-to-day transactions. Make sure that your system descriptions list estimates or detail how to do estimates, link it. Otherwise, we need to capture it here. Is the current year accounting policy in line with the requirements of the applicable financial reporting framework? In other words, they haven't gone and done fair value, but the standard says they must do cost less accumulated depreciation or amortized cost. Go through the questions. Get to 2.2, entities internal control. Look here. Here are the 4 that I documented in 1280. Okay, but you know what? Damien, Bianca, and DeLeon are not involved in this estimate, so you can leave Leon. Or maybe it was DeLeon who did it. Just go and delete those ones. So you see the approach that I'm following here. We want to make this section generic so that you can quickly delete not applicable. Maybe it's none of us. And in this case, it was actually Earl. Then delete, put in Earl's details. You don't have to use the information that's populated, but we're trying to make things a little bit easier for these questions in this regard, because there can always be this commonality. All right. If you're not sure what you should be documenting, check the guidance, check ISA315. How much detail? Well, consider the size and nature of your entity, consider the complexity. Here we get to the second question that also talks about previous accounting estimates. Again, delete. Oh, but hang on, Leon doesn't quite do that. So you can go Control C to copy, Control right click, paste special. And you can go to values and value paste it. And so Leon does something else. Maybe it's different for this estimate. You could go and change that documentation. Okay. Document the previous year's estimate. That's not generic. Document the actual outcome. That's not generic. So you're not going to see this pulling through from the ISA315 considerations document. Work our way through. Are there indicators of bias? Is there any communication? Was this identification process properly documented? In other words, am I happy that I've got enough detail on this working paper now? Hopefully, yes is the answer. Fantastic. Now we come to step 3. I have now got to assess the risk of material misstatement. So this balance is material. So I'm going to say it's material. Folks, also consider it's not necessarily the balance that we're considering here, but the extent of the estimate that's made. So let's say materiality is 1 million and your loans to shareholder are 10 million. Well, 10 million is material. Great. But maybe the estimate only makes a 5,000 Rand difference on your balance of 10 million with 1 million as your materiality. Then I wouldn't say make it a significant magnitude, a material item. Then maybe you want to say medium. All right. Then it asks a few questions about the, as we said, degree of estimation uncertainty. Yes, no, yes, no, 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 no. Okay, please don't just put in random yeses and nos. That's not the way to do it. So what is my assessed degree of estimation uncertainty? I think it's medium, low. The reality is, folks, though, that this doesn't actually affect your answer here at the bottom. And we might actually change this question slightly because it's a little ambiguous, and I'll show you when we get to degree of complexity. So now we say, okay, is there complexity involved in this? Let's say no to all of these items. Great. Please note, folks, there is space for referencing. So go and document, go and put on file the minutes that were relevant to you making this decision. Please don't use this as a checklist and say no to all and think you're done. But we do that, the yellow cell conclusion. Have you assessed it? And you'll see here we actually start asking yes, no. This is why I think that medium, we did just reword the question. So the question is really just asking, have we assessed the degree of complexity? Yes, we have. I'm happy we can continue. All right. Other inherent risk factors are going to say no. And so it pops out that my risk of material misstatement is low. All right, I actually want to, for illustrative purposes, make this a significant risk. So I've got to go and get that to almost certain. And I need to go and make my magnitude material. And then I've got a significant risk. Okay. Are there mitigating controls? It's significant. I have to go into more detail and look at these controls. Document them. Okay, please make sure that the control you're documenting actually mitigates the control risk, or the control and its significant risk. Don't go and put a PPE control to my loans to shareholder. Okay, as much detail as you need. Once again, if your system description adequately details this, you maybe just want to put a hyperlink in. Document a walkthrough on these controls. Okay. Are the controls designed and implemented effectively? Remember, this is not yet control testing, but this is a conclusion we can make by looking at the design of the control, and the walkthrough tells us if it's implemented, and then at that point we can say yes or no, it's implemented effectively, designed and implemented effectively. All right. If it's implemented effectively, we might say, yes, I'm going to do testing. If it's no, then please, you can't do control testing, and put a reference if applicable. All right, what is my audit approach? We have decided to perform substantive tests of detail after year end. That's the timing. And the extent is there because it's significant. We're going to do a lot of testing. So nature and timing, nature, substantive test, timing, after year end. Great. Changes in audit approach, none. Hopefully that's generally what your answer is going to need to be, but we create the space if it is relevant. All right, now let's go and decide what procedures, or what type of procedures I'm wanting to do. All right. Events occurring up to the date of the auditor's report. You know what? I think that one looks good. This one I'm not going to perform. I'm not going to use B at all, so I can just copy and paste. I'm not going to use. I don't need to then worry about significant assumptions and data because I'm not doing procedure B, and I don't need to look at management's point estimate. But what I am going to do, because it's a significant risk, I'm going to do some extra procedures. So I am going to go and do a point estimate. Okay, so that in fact, yeah. Yeah, that's what I'm deciding and I'm going to do. Disclosures, is it a direct disclosure? Maybe yes. Look at the adequacy of that disclosure. And as I said, please always do indicators of management bias. There is a little question here at the bottom, hide not applicable. So I go and say, yes, I want to hide the not applicable. And then all the not applicable sections are off. Okay, we do still have some items that show up. I think there are some tweaks we need to do to fix up some of these no's, but typically what should be happening here is only the items you are performing will appear. Once we fix that, that should no longer be an issue. But then you can go and give reference to where you've done the work. As I said earlier, please go and document the detail of the procedure that you performed. This is not going to be sufficient detail. Comments generally should just be temporary and removed later, maybe just a comment to your manager. Say yes or no, was the test successfully carried out? Sign it off, put a hyperlink to any other additional references that you might want to do. So work done, maybe there's a second reference. We've just created some extra space for you there. And then when you're done, I can hopefully say, were the procedures carried out and successful? Yes, happy days. I can move on to step 5. And I can start looking at my conclusions. Now, once again, maybe there are exceptions. but generally we are going to need to look at most of these items, except it's not a fair presentation framework. I've selected it, hide the not applicables, and okay, now I've only got the procedures I want to perform. So let's evaluate. Let's look at management's decisions, evaluate if sufficient appropriate audit evidence has been obtained. That might just be linking back to a conclusion on an existing working paper. So these things don't necessarily mean another procedure needs to be performed. And sometimes all of this is going to appear on one working paper. You're just going to be able to do one, here's what I'm doing, and it addresses all of these items. So please, again, use professional judgment to determine exactly what procedures you want to perform. And now we want to conclude. Let's have a look. Management, so the way they're doing the estimates, we feel is going to increase liabilities generally. It is going to decrease assets. So assets, liabilities, we usually expect them to be opposite. Liabilities, equity, not going to impact equity. Happy with that. Okay. Have I customized procedures? In other words, when I did my work, did I go and describe the procedure properly? Now, I know hopefully you've done it, but yes. Have estimates been identified where management bias, which management has not correctly documented? Have estimates been identified which by management not correctly identified or documented on 1280? If yes, go and add it. Hopefully it's no. We go on. Did the auditor identify areas where management should have raised an estimate but has not done so? Yes. Add additional working papers. You might also then need to go and add an estimate if it's additional estimate areas. Or what you could just be finding is that we thought this was an estimate, but management didn't estimate, and therefore we actually need to raise it as something to communicate with management. All right. Told you about the hiding. Give a reviewer sign off. This is just an additional text box that then doesn't require you to completely sign off the whole working paper, but you might just be able to then just sign off, okay, I've done this work. And were there any instances of fraud identified? If yes, as I said, go and document it and link it. If not, no. All right, folks, that's the process through 15.50. We need to go and do this work related to estimates. Once we've done that for all my estimates, I can now begin looking at concluding on them. And so I go to my final estimates summary. All right. So what this working paper now does is it goes and lists for me all of the estimates that I identified in 1280. All right. We just now need to go and confirm. It's the end of the audit, remember. Are we happy from a concluding and finalization of this file that the estimates have been properly identified? Yes or no? Now, this identification process properly documented, that pulls through from 50.15 or the separate estimates working papers. I just didn't complete it on this working paper on these dummy ones that I did, so that's why nothing is coming through. What's the significance or the magnitude of that estimate? What's the degree of estimation uncertainty, and what's the degree of complexity and subjectivity considered? And so what is my overall likelihood of misstatement, my ROM? The likelihood times the significance or materiality gives me my ROM, my final risk of material misstatements. Where it's significant, it pulls in what I documented around controls. Mitigating, have they been tested, or are they effective? So those three questions are answered there. Were procedures successfully carried out? Again, because I didn't do those properly, it's not gonna it's gonna be blank, but usually that will automatically pull through from each item. And has management included disclosures beyond those specifically required by the framework that are necessary to achieve the fair presentation of the financial statements? What we're getting at here, folks, is if we go, for instance, and have a look at depreciation, and you go to the accounting standard on a depreciation, it tells you you need to do the following document, or you need to have the following disclosures related to depreciation. So firstly, it's going to appear on my fixed assets recon. You're going to show current year depreciation, accumulated depreciation goes in there. And there's also in the standard a requirement for you to say where in your operating profit does this appear. And so there's that operating profit note that separately shows what the depreciation was that sits under cost of sales or other expenses or whatever, depending on how you've linked them. This is saying that over and above the requirements of the standard, I've also gone and created this depreciation note because our assets are highly specialized assets, subject to a lot of fair value adjustments, and it's very, very complicated. So in order for users to understand the depreciation number, I've gone and added a lot more disclosure. That's what this yes is for. It's not just for, oh, we've got a note for depreciation, therefore I say yes. This is for over and above the requirements. So once again, my anticipation is you're probably going to say no to this most of the time, but it is there in those instances where you needed to go beyond. Communications. Again, we've got the question to be performed. We're probably always going to need to perform these. We can't get away from it. So please do go and communicate with management. Please do get written representations. This should just be a hyperlink to your management representation letter. But the reason we raise it here is there are sometimes going to be requirements for you to add things to your management representation letter because you had to get other information from management specifically related to these estimates that you won't typically put on a management representation letter. This could be things like specialized trading or trade secrets that are not open to the public that they've shown you, they haven't necessarily given you, but you needed this information in order to work out and understand the estimates that they've made. Then please go and ensure that you add those items. And then communications, just look at Appendix 2 in ISA315. It's got quite a lot of areas where you might require some form of communication with management. All right, so I've done all of this. Have I obtained sufficient audit evidence for the accounting estimates and related disclosures overall in my financial statements? And then there is again space for a partner sign off. Please note there is a formula. So once the partner signs this off as reviewed, it will put in his initials and date. You don't need to do a manual signature. Then coming back to management bias, we want to go back to that overall evaluation. And so what we do here is we bring through that unchanged, decreased, increased for every single one of the estimates that you've identified. Because that difference, that decrease could be 100 Rand or it could be 100 million Rand, it's very difficult to put a numerical value to this. But what we're looking for is some sort of pattern in what's happening to our assets, liabilities, and equity. And you'll see that we've got a fairly mixed bag. Increase, decrease is fairly consistent across all of them. So for me, this doesn't look like management bias when I look at everything together. Remembering that when I did this test, I considered if for this estimate, is there management bias? So I've gone and looked at it individually. This is just saying that over and above that assessment, when I look at everything together, what's it doing to the financials? And so I just go and have a look at the The most is increased. But based on this information, do I start feeling uncomfortable that maybe there's management bias? What we're looking out for is a situation that, remembering that different clerks do work in different sections of the file sometimes. And so there's not always going to be one person with a big picture. This is trying to get a big picture. If everything is increase, I might be concerned. Maybe it's just coincidental, but it might be for me a concern if the stuff is grouping together a whole lot more than what it is in the circumstance. So what we say in our conclusion is, based on this little assessment, do we think there's need for a more thorough investigation of the above impacts? And if you say yes, what you're probably going to do is then go and say, well, let's go and look at the actual values that this is shifting by each year. And you can then do a more value approach. For now, we're doing a high level generic impact on the financial statements. And if we're happy here, boom, work done, we've assessed it. Okay. ISA315 requires an audit to evaluate whether the judgments and decisions made in making accounting estimates, that's that copy and paste from the standard. So do you believe there's sufficient evidence in order to perform our evaluation? So in other words, are you happy documenting anything else? And then at the end of the day, are you satisfied that there's no bias? If you say if you're not satisfied, then please go and document somewhere what you're doing about it. Are you looking at scope limitation? Are you looking at qualification, whatever the case might be? But that is hopefully your final answer. Overall evaluation, I'm satisfied with estimates. Remembering estimates is always considered quite a high risk area. That's why we're focusing on it so much. That's why there's a working paper for every single estimates that we have on file. That's why it's become a focal area for IRBA and reviews, for auditors in general. And folks, that is my story.